Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. This video is part of the series The Final Missing Piece. In this video, I'll share my analysis of historical trends of the castings, forgings and fastener sector. Before moving on, please read the entire disclaimer carefully. The castings, forgings and fastener sector plays a vital role for the manufacturing and engineering industry. It's crucial in supplying components for automotive, aerospace, construction, power, railways, and industrial machinery. This sector is essential for both domestic consumption and export markets. The key growth drivers for this sector includes automotive demand, infrastructure development, export potential, and renewable energy expansion. The government supports this sector with policies like Make in India and PLI, which boost domestic manufacturing. The challenges that this sector is facing includes raw material costs, power and energy costs, competition from China, and technological upgradation. So now in order to identify a trend in this sector, I'll present two graphs. They are the end results of my analysis of the share price movement of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of 3 large cap, 6 mid cap and 1 small cap companies. The first graph will show the yearly returns, whereas the second will show the monthly returns. So let's start with the first graph. So this is the first graph which shows the yearly returns. The green bars over here shows the positive yearly returns in percentage. The red bars over here shows the negative yearly returns in percentage. The orange line down here, this shows the cumulative returns percentage. The green line over here, it shows the number of months with positive returns, whereas this red line shows the number of months with negative returns. So let's start with 2015. 2015 was a very dull year for this sector with only 3.57% returns. 6 months gave positive returns, whereas 6 months gave negative returns in that year. 2016 too was a very dull year, I would say, for the sector with only 5.56% returns. 7 months gave positive returns, whereas 5 months gave negative returns in 2016. 2017 was a very good year for this sector, and the sector managed to give returns of 60.25% with 10 months giving positive returns and only 2 giving negative returns. 2018 and 2019 were very bad year for this sector. In 2018, the sector gave losses and the negative yearly returns of minus 8.97% with 7 months giving negative returns and 5 months giving positive returns. In 2019, the situation worsens and the sector gave negative returns of minus 20.95%, so approximately minus 21%, with 8 negative months and only 4 positive months. The situation turns on its head, I would say, and in 2020, this sector gave very good returns of 68.18% with 9 positive months and only 3 negative months. In 2021, the sector improves even further, and the sector managed to give returns of 86.21% with 10 positive months and only 2 negative months. In 2022, the sector gave good returns of 21.47%, nothing extraordinary, with 7 positive months and 5 negative months. In 2023, the sector performed the best in last 10 years with 110.10% yearly returns with 9 positive months and only 3 negative months. And in 2024, the sector gave very good returns of 46.51% with 7 positive months and 5 negative months. The cumulative returns in the last 10 years are 1376.31, that is 1376.31%, which is approximately equals to 15x in last 10 years. So let's see the takeaways from this graph. First, the cumulative return we have just seen, it's 1376.31%, which is approximately just less than 15x in last 10 years. CAGR of 30.89, approximately 31%. Very good CAGR, I would say. Very, very good CAGR over last 10 years. Net negative yearly returns. So 2 years gave net negative yearly returns. 2018 with minus 8.97% and 2019 with minus 20.95%. Best years, no doubt, is 2023 is the best year for this sector in last 10 years with 110.10% return. Worst year, 2019 with minus 20.95% returns. Positive to negative year ratio is 4 is to 1, which means uh, there were 4 positive years against every 1 negative year in the last 10 years for this sector. Let's move on to the next graph, which is the monthly returns graph. This is the one. The green bars in this graph shows the positive mean monthly returns, whereas the red bar shows the negative mean monthly returns. The green line shows the number of years with positive returns, and the red line shows the number of years with negative returns. So let's start with January. So in January, the average returns of over last 10 years is 2.69%, with 6 years giving positive returns and 4 negative returns. In February, the average returns are negative 1.83% with 6 negative years and 4 positive years. March almost flat with 0.11% returns with 7 positive and 3 negative returns. So one thing to keep in mind is there was a huge crash in March 2022, March 2020 because of the COVID. So the average returns over last 10 years being non-negative is a good thing, is a plus point for the sector, and with 7 positive returns, I would say it's not a bad month for this sector. Even though the average returns are almost flat, still I would not say that it is a bad month for the sector at all. Then is April. So April managed to give an average returns of 6.38% over last 10 years with 8 positive years and only 2 negative years. So very strong month for the sector. May, only 0.75% returns with 6 negative years and 4 positive years. So a weak month for the sector, I would say. June, 4.47% average returns with 6 positive years and 4 negative years. July with 4.65% average returns and 9 positive years in the last 10 years and only 1 negative year. So very strong month for the sector, I would say. August, the best in terms of average returns of 7.26% with 8 positive years and 2 negative years. So undoubtedly the strongest month of this for the sector. September, the average returns over last 10 years is 1.09%, with 7 positive years and 3 negative years. October, an average month with 1.23% returns with 6 negative and 4 positive years over the last 10 years. Same is the case with November, 1.03% average returns and 6 negative and 4 positive years in the last 10 years. And December fares better as compared to October and November with average return of 3.4% and 7 positive and 3 negative years in the last 10 years. So all the February is quite clearly the weakest month for this sector, it seems. Um, I'm still surprised by the March performance. March, even though it is flat with 7 positive years, I think March to be a good month for this sector. Anyways, let's see the takeaways from this graph. First is the cheaper month, February and March. So February and March are the cheaper months. Again, March is something that we need to keep in mind about the 2020 COVID crash. Let's move on with the costlier months, April, June, and August. So April with 6.38, with 8 positive and only 2 negative years. July with 4.56 percent returns and 9 positive returns and only 1 negative returns in the last 10 years. And August with 7.26% average returns and 8 positive and 2 negative years in the last 10 years. And lastly, positive to negative month ratio is 1.61 is to 1. So which means 1.61 positive months against every one negative month over the last 10 years, which means over the last 120 months. So I have presented both the graphs in front of you, and I have shared my understanding, my pickups, and my takeaways of these graphs. So that is all from my end in this video. Thanks for watching. Like if you have enjoyed enjoy this content of this video, subscribe to the channel, share it with your family and friends, and press the bell icon. Thanks. I'll be back soon with another video.